All right, so thank you all for coming. So on stage we have Vassilios Psaltis, the CEO of Alpha Bank. And if we try to start with a question on everyone's minds, you have publicly welcomed UniCredit's investment in Alpha Bank, which has now gone to 26%. So what does a higher stake mean for Alpha, and what are the options from here?
Well, thanks for the invitation. I think it's more than 15 odd years that a Greek bank has been sitting on this stage. So I think we have earned that with what we have been delivering that. And again, thanks to the audience that are jeopardizing part of their lunch to be here with us. Well, coming to your question, which I appreciate, it's a valid one. I think you appreciate that I cannot speculate on the full takeover question. And I think, again, it's a bit inappropriate to start commenting on hypothetical scenarios. But what I would be glad to talk about is the impact that we see that the partnership that we forged with UniCredit is having. And I believe, given that we're working now for about a year together, I think on the one hand, it is truly a sign of confidence to the trajectory of our bank, but at the same time, it is also important in terms of their feeling about where the country is heading. This is something also that, in particularly given the increase of their stake to 25-ish% that they are right now, that there is a full alignment of the medium-term interest of both parties. So I would simply quote Andrea Orcel, who has publicly stated that the results are beyond expectations, his initial expectation. And I think what is important to state is also that this is not a one-on-one sort of relationship that has delivered this deal, but rather that the full senior leadership team on both sides, so about 50, 60 people, that get to know each other. And now we have an array of about 30 projects that we're working on. That proves to be a key differentiating factor for Alpha Bank. Now, at the same time, what is important to state is also what the clients are getting out of that. And I think for Alpha Bank clients, the benefit is very clear. We're giving them access to the largest network of banks within Europe. So anyone that is export-oriented or has subsidiary abroad immediately looks forward towards receiving a single entry point into a group and getting the benefit of not having multiple relationships. That, given that we have a very strong corporate background, it puts us firmly as bank of choice to our 5,000 plus wholesale group clients. But conversely, also, given that Greece is, there is a lot of interest to invest into Greece or from existing investors into the country, that we are proven to be for UniCredit's multinational clients, therefore not just of Italian origin, but also Germany. Germany is anyway the largest trading partner of Greece, and also other areas that look into Greece and Cyprus, that they have the bank of choice to ensure that we have a quality assured delivery of their services. And just to highlight a few things that we're doing together on wealth, we are tapping on the product factory. So we're distributing the One Markets Fund suite that they do have. And year to date, we've already distributed 600 million, which adjusted for the disposable income of our country, it puts us very high in the productivity of the distribution within the UniCredit network. Then the other thing that we have been working together is on wholesale. We have a preferential entry point into global syndications, and there we're focusing on sectors we do understand. We're doing a lot of LGs, LCs together for our clients. We're looking bilateral effects, which is close to 1 billion so far. So we are doing a number of things together. And then Romania, which was the initial point of contact with UniCredit, there we have done a lot of groundwork in order to make this merger as smooth as possible. We've done with Andrea a number of town halls in Bucharest to achieve that. And indeed, it has been an exemplary merger. There we have decided to keep just 10%, but we do continue to have 2 board members. And as we have both agreed, because we do like the country very much, if there are opportunities in the future, we would be looking forward towards co-investing there as well. And then there is a subtle point, which is not a business one, but it has been quite important for us coming out of the crisis after 10 odd years, and that is the know-how transfer. There is a very good relationship and very candid stance from their side, and they're helping us to beef up our knowledge in areas like, for example, customer experience, in the area of compliance, in the area of process optimization, in the area of operational resilience, but also in many other areas where if someone would want some support on our side immediately, they're there to offer that. So all in all, I think this is a partnership differently towards other models that we might have seen before that is working as a catalyst for growth, for innovation, and definitely for our regional leadership in there. And that gives us a unique advantage towards our peers.
Thank you. And then if we stay on the topic of M&A, so Alpha has been quite active on that side itself. So through a couple of acquisitions within Greece and Cyprus, also a couple of collaborations. So what is the strategy going forward? Do you think you continue doing this?
Well, I don't consider M&A as a strategy per se. I rather consider it as a tool. I mean, indeed, it's quite a powerful tool, but it has to be embedded within a strategic narrative. So what is important is to appreciate what the narrative for Alpha Bank is. And indeed, what we are mostly focusing on is EPS growth. That is what lies in the very heart of what we're trying to achieve. And there, I think we have a good tailwind on three things. Number one, we have a very strong momentum in the macro, in the core geographies where we operate. Then we have a very firm strategy to expand the product palette. This, again, is a remnant of the crisis where we need to play catch up. And at the same time, we go deeper into cross-selling in certain segments where we're very strong and are of high added value. But in order to achieve that EPS growth sustainability that one wants, additionally, one needs to look at the jaws, and in our case, they are strongly positive. But also, if there are any other structural shifts within the P&L, and in our case, as you would appreciate, is that the cost of risk is coming sustainably down. So if you add all those things together, you have really a very strong strategic narrative for Alpha Bank. Now, where does the M&A come into? In our capital allocation framework, we are firstly looking towards allocating capital to organic growth and also to have a sustainable payout. Therefore, that framework puts also the discipline in terms of both the strategic as well as the financial criteria in order to conduct M&A. And in the three transactions that we announced in the first quarter of this year, as well as also on the strategic partnership that we announced in the second half, all of them are coming to accelerate the delivery of the strategy, adhering to this capital allocation framework. And that's why we are so proud that we are able to deliver value. And if I say just a couple of words on each one, Flexfin, who has been a fintech company practically in the factoring area, that is enhancing our factoring platform, a very important product for Greece, given that it's a balance sheet, which is data-driven approach. They're helping us out to penetrate also into segments which elsewhere we could not see, like the small businesses and the lower part of the SMEs. And they have very good risk-adjusted returns. I mean, it's going to be EPS positive year one. The second acquisition that we did was Astrobank, which is a Cypriot-based bank. There in Cyprus, we wanted to get as quickly as possible into systemic status. Again, we're number 3 now with this acquisition. It's a diversified portfolio, mostly focusing on the SME. But what is important, it's also that it's doubling our profitability day one. Then the other acquisition, which is Axia Ventures, it's an investment banking boutique, which on the advisory space, practically they're making more than what the 4 Greek banks, the large Greek banks have been doing together. So this acquisition was very important as we are elevating the dialogue to our corporate clients. And together with the presence of UniCredit, we want to have that holistic dialogue. So we have now 30 board professionals contributing to that. We're looking towards a return on this investment of north of 20%. And this is pure fee business. Now, the partnership that we have announced, this is with Hellenic Post, and that is practically a financial inclusion play. Through offering our services and banking products to their 1,400 locations across Greece, we're going to be able to deliver services to more than 1 million of Greeks that were underserviced. So we're looking towards That model, which has been nicely implemented elsewhere, in order to draw some conclusions to make it not just from a financial inclusion point of view, but also from our point of view to make it quite profitable. So if one adds all that, I think you're looking forward towards a continuation of that strategy. We're looking towards further accelerating what we're doing. We're looking towards finding opportunities which would fit nicely into that strategy, adhering to our capital allocation framework, and at the same time, they will deliver value to our clients.
Thank you. And then can we talk about growth? So corporate loan growth in Greece has been very strong, running well in the double digits, which screens very well versus Europe, where it's quite muted. However, on the other side, mortgage growth has been negative so far. So how do you expect these to evolve, and can we expect that Greece into the longer term would outperform the Eurozone in terms of GDP growth and loan growth?
Well, indeed, Greece is experiencing quite a significant corporate lending growth. We're talking about over the past 5 years to have a consistently comfortable double-digit growth. But we need to appreciate what is the reason for that. And the reason for that is that Greece is firmly on a catch-up mode. Greece has eroded about 100 billion of capital stock during the crisis, which is a humongous number. If one thinks that we went into the crisis with 240 billion GDP in real terms. So after all this investment that has gone into the country, we have just been able to recoup 30% out of that. So we are still in catch-up mode. And our GDP in real terms is at 205. So we've not yet come back to the status quo ante. That speaks a bit about the process and where we stand in all that. The other point is that also the actors, the Greek corporates, those that have survived the crisis, they have come out very strong. If you look at the balance sheet, they're quite strong. If you look at their leverage, it's pretty low. So they have capacity to grow more. I mean, if anything, I would say for the top 10, 15 names in the country, their balance sheet is growing faster than our capital. Therefore, from an Alpha Bank perspective, being also a strong corporate bank, that comes very handy to us. But on top of that, we have also the partnership with UniCredit, which gives us also access through the syndication market to sectors that we do know to get further access. But we always are disciplined in keeping the risk reward because we have strict RORAC criteria on which we are basing our credit decisions as well. Now, your latter part of the question was on the sustainability of this growth. And whilst I explained how much catch-up there is still to do, I think Greece needs to become even more investor-friendly than what it is. I believe our Prime Minister is probably one that embodies market understanding, but we need to do more. And also, I would say, at the economy front, we need to work out more opportunities that would add value to people, because this is a relative game. It's not just someone that wants to invest in Greece. Someone that would invest in Greece could invest also potentially elsewhere. So the relative game is something that we need to become much stronger. And that means that for the country overall, the investment proposition needs to become bolder. Now, you mentioned also retail. Retail, indeed, we're still not in positive territory. Mortgage is improving. It's year on year on July, we were minus 1.1%. And there we faced two key issues which are similar to elsewhere in Europe. Affordability on the one hand, as coming out of the crisis, real estate prices in the residential front have grown faster than the disposable incomes of the households. And the other point is the lack of appropriate supply. We're estimating, give or take, something like 200,000 of missing units in the residential market. Now, the government is looking very seriously at that. They've already launched an initiative in order to come again into the whole social housing space. And also they're trying to do two things. Number one is there's going to be a law over the next few weeks, which are going to be putting incentives in order to create affordable housing. And also they're looking towards restricting a bit the Airbnb because indeed a lot of long-term rentals have been shifted to short-term rentals. Now the government wants to reverse a bit the trend. But beyond also the lending growth, fee and commission income is also growing strong in Greece. In wealth management, for example, we are looking at a very underpenetrated, given the crisis space. There, given also that we are best placed, we have about a third, we've captured a third of the affluent market. We're very strong, and we're working with UniCredit products there as well. But also in transaction and investment banking. In transaction banking, we offering this cross-border flow, which is important for transaction banking, but also in the investment banking side, I said about Axia. I think what is important is not just to look at the next sort of 2 years where we did through the tailwind that we're having, we're going to be doing that, but how Greece would look further beyond going into the status quo of the 240 billion, but actually looking to catch up with Portugal, not even in Spain, countries that when they entered the Eurozone, actually they were behind Greece in terms of GDP per capita. And there, I think we need to continue as a government, we need to continue to do more reforms. And recently, the Prime Minister has put out a bundle of reforms which go definitely to the right direction and will accelerate growth. Then we need to look at targeted investments where Greece can really make the difference. It's not going to be, it's a small country, so it's going to be 4 or 5 areas where we can be of relative importance in terms of those investments, but ultimately have a relentless focus on value creation. I think that is the ultimate litmus test for both for the government and for any private operation in the country.
Thank you. Then if we change gears a bit, so Greek banks so far have been fairly simple commercial banking institutions, but the business environment is changing. So how do you expect it's going to change further? And how are you positioning Alpha Bank for that change?
Yeah, I mean, indeed, the Alpha Bank and all Greek banks were plain vanilla commercial banks. That is what was needed in order to perform there. And as a commercial bank, what is important is what is your strength is your franchise. I mean, and we as Alpha Bank were the most trusted brand in the country with deep roots throughout Greece and Cyprus. We have a strong customer base. We are known for reliability, for the quality of our services, and also that we are able to perform across the cycle, that we stick to our customers and we help them out. Even during the crisis, we have been doing so. So I think looking at now how the environment is changing, it is important that we pivot our strategy to the next level. And in our mind, first and foremost, what we need to do is to stick with our clients. And as we see the confidence returning to them, more and more clients are broadening up their offering internationally. So if I were to pick a few areas, the one, for example, is offshore wealth. So whilst we have a 30% market share in onshore, and we do know that there are a good number of Greek clients that choose to work out, not just from a custodian relationship, but also from a management perspective in other centers, we need now to get the credentials, get the skill set to transpose our onshore model also in a selective way to offshore. We have a presence in London. We have a presence in Luxembourg. These are areas where there are Greek clients that manage their wealth. We need to do more in that direction. Then there is the partnership with UniCredit, which to us, it is a game changer as it allows us to capture the flows. And if you would want also evolve from a commercial into a mini sort of universal bank in the area. For those 15 countries that UniCredit has a presence, we can do cash management, trade finance, we can do syndicated loans, we can do also things that relate to their advisory. And definitely, as I said, we can do more on the wealth products. So practically, that means this pivoting of the business model that you said is about redefining the perimeter, is exploring these cross-border flows, is focusing on sectors where we do have strong credentials and strong clients. Shipping is the only global industry that Greece can demonstrate. And also in the hospitality areas, it is the strongest export. It's an export of services. So this is also very strong. And we have a strong presence there as well. So around this bit, plus the Greek exporters is how we develop that. So expanding the reach, deepening the capabilities, and leveraging the strategic partnership that we have with UniCredit. These are the core focus in order to evolve our business model.
Thank you. Then if we turn to net interest income, Greek banks so far have been more resilient than what the market expected. So Alpha Bank last quarter even had NII troughing. You had a target that this year your NII would be higher compared to last year, despite the rate pressure. How is that going to be achieved? And probably more importantly, what is going to drive NII going forward from here?
Let me start with a very short term. The 1.65 billion NII achievement that we had of last year, we're slightly going to not be able to meet for this year, and understandably so, given the fact that we had this faster than anticipated rate environment as the ECB stepped earlier in and with more force, but also we have the USD softening. But I think what is important is what was our response to that, and the response to that was that we have committed to accelerate further the fee contribution, and that's why we're keeping the guidance for the operating income for the year the same. Now, to your question about the drivers that can deliver net interest income, you said it, slightly correction, is that we had a 1% Q-on-Q increase, which means in the second quarter, which means that now the worst, we have it behind us. The shape of the curve that is stabilizing, it is good for the reinvestment opportunities that we get for our securities book. So that is an additional enhancement as well. Loan growth is strong. In the first half, we had net credit expansion of 1.5 billion. That was in line with our guidance. But also importantly, the funding mix is improving. In the second quarter, we have been able to attract about an additional quarter of deposits. But in July, and that was also, I think it happened with a four, was that we were able to print a tier two at the best ever rates and spread that a Greek bank has ever done. And imagine we were just 15 basis points wider than UniCredit. So that is something that has come faster than what we anticipated, and it's obviously very welcome, supporting again the NII trends. So looking forward into our guidance for 2026 and 27 for 1.7 and 1.8 billion, I think we can definitely stick to that.
Thank you. Then if we turn to capital returns. So 3 years ago, Greek banks were not paying any capital to investors. Last year, you had 43% payout. Now you're targeting more than 50 for 25 to 27. So how can we expect this to evolve? And maybe if you can tell us how it's going to be split between dividends and buybacks, and maybe if we can get some bigger buybacks into the future.
Yeah, let me start by saying that the discussions and the overall atmosphere in our discussion with the regulator has massively improved. I mean, if where we were, as you said, 3 years back and where we are right now, it's a different world. But still, they're the regulator, they're a counterpart, and we take them very seriously as we approach the matter. So what we have currently out there is that we're looking towards a payout of 50%, at least 50% for 2025. And we are growing more confident into that, but this is what we have put out, and this is what we stick to. At the end of the day, this is something that only a couple of months before the decision, also the regulator who holds the cards very close to his chest, will open up. Now, the split between dividends and buybacks obviously depends on the valuation. Now, when we had to take that decision last year, it was a very easy one where our valuation was, and ever since our valuation has doubled. Now, that is a decision that we need to take later on next year. But so far, we're executing on the plan. Our buyback is going to be starting soon, and that's going to go like planned. Now, if one looks into next year, still we're trading at a lower multiple than our peers, and we are off our fair value. So that means that the room for maneuver has come smaller, but does not mean that it does not it is not very, it is still not a credible option that we can put at the table. Now, returning capital is obviously one part of our investment thesis. I think what is much more important is also that we have a strong earnings growth, and these improving returns, they manifest into the target that we have put out, which is a 9% CAGR on 25 to 27 EPS, notwithstanding the buyback. That means that even with the buyback of this year, we're going into a double-digit EPS growth. And probably that is also the reason why we have seen this stark performance year to date. And for the first half of this year, we have been the bank in Europe with the strongest increase in terms of its market cap. Someone told me that it's even globally that case. Obviously, we're very happy to witness that. That allows us also for a clear path to convergence with our European peers. So that gives us confidence on the target that we have put out, which is to generate more than 3 billion of capital over the period of 2025 to 27. And that is going to be used to fund organic growth, to fund an increased payout, and also to pursue further bolt-on M&As that will adhere to the rules that we have put out. Now, are there any risks to that? There are always risks. The point is what you do in order to mitigate them. And we feel that with a strong core equity tier one that we're having at 16.1% core equity tier one that puts a lot of buffers in there, it's still more than 3 percentage points north of our management target, which we have put back then, and we will need to review. Also in the organic capital generation that we were having in the first half, which is of 111 basis points, but also the fact that we have accrued already 259 million in the first half for payout purposes, including the 111 million that we will be giving out as interim dividend later this year.
Thank you. One topic that's quite relevant in European banking right now is bank taxes. And there seems to be a bit of a love and hate relationship with the Greek government. So they have done quite well in terms of policy, but they have also put some burdens on the banks. So do you foresee a bank tax or any other sort of burden in Greece?
Well, you know that Greeks are very sentimental, so they are driving up emotions very, very easily in those situations. No, I think starting on with the prospect or the potentiality of a bank tax, that is not going to be the case in Greece. That is something that the Prime Minister has both privately and recently again publicly denounced. And I think it has a lot to do with his background, that he understands the market, that he understands what is going to be the impact of such a task, and that any tax at the end of the day becomes endemic. It's very easy that it comes on a recurring basis, and that's why he does not like that. Now, having said that, indeed, there are things that we're not looking eye to eye with the government. In particular, the government has quite a strong hand, I would say, in things that they feel that they're not as efficient as it used to be, or as they would like to have actually in the market. So they have been imposing caps and certain fees relating mostly to transfer payments and stuff like that. And recently, there was one of our competitors that did a structured deal around ATMs, which changed, if you would want, the playing field, and then the government intervened, and we all had to suffer from that. But we're talking about things that, at the end of the day, the government wants to portray itself in the general public as someone that is a strong custodian of that. And I have to confess that in one or two cases, there were a bit of excesses also in the system. The other point is that we have been invited to participate in a huge, for Greek standards, CSR initiative, which is to refurbish a good number of schools within the country that, given the crisis, they were really not in a good shape. And last week, we were there at the beginning of the school year together with the Prime Minister to inaugurate one of them and talk about that program. That program spans over 4 years, and we're going to be co-investing with the state 400 million to do that. That is important also for us, because at a period where we want to reintroduce ourselves to mostly the households, not just for transactional purpose, but someone that really has a raison d'etre to talk to them about their future. Doing something about the future of the kids is very, very important. So we're contributing into that program more than the state, but I think it is for a good cause, and there may be also opportunities towards that direction in the future. I think what is important to keep is that whilst there is this love-hate relationship that you said, behind closed doors, there is a constructive dialogue. And even if the government wants to push for something, they look at ways to do that in order to, I wouldn't say necessarily to protect our P&L, but to make sure that the investor base is not going to be seeing that as an intrusion of the state into the Greek banking affairs.
Thank you. I want to check whether there's some questions from the audience. Yep.
Hi, thanks. How do you see the asset management industry in Greece evolving? Your own arm specifically, the strategy behind it, and what is UniCredit going to change in this specific segment of your business? Thanks.
I mean, the overarching cluster is wealth management, and within that, we look at the asset management as a product factor. Our subsidiary there indeed is the market leader. If one comes and looks at the more value-added product, and number two, if one takes also the money market funds into account. Our role there is important because we are someone that facilitates the flourishment of the Greek capital market space, but at the same time also it has a cost-effective way of bringing in products. Now, one area which should have a lot of growth going forward is the second pillar in Greece, where overall for the pension nest that people should have aside, and they have been relying for all too long on the first pillar, on what the state will be doing through the state pension fund. I think through the crisis, beyond everyone's doubt, that is not going to be anymore the sole contributor. Therefore, we need to grow the second and the third pillar. And this is what we're doing. In the second pillar, asset management product factories have a key role to play and are already doing so. But we pitch to the government to have more incentives towards that direction. The third pillar is also where we're working on, not just with the products of our own product factory, but also we're working on with UniCredit, and the One Market Fund is enlarging the solution space where people can invest into. So that, in my mind, is one of the most fascinating areas, the wealth management. For Greece, we're starting from a very low point. There is a lot of wealth abroad, and there is a lot of things that we should be doing in the country.
Thank you. Any more questions? Yep.
Thanks. The second question you answered was on the corporate loan growth at 15%, and your answer kind of implied that that was sustainable, and you gave a lot of reasons why it would be sustainable. But what about the personal loan growth, right? So the consumer loan growth, that's negative now. I would have thought a lot of the reasons you gave for the sustainability of corporate loan growth would also apply to the consumer. Where do you see that loan growth going?
Well, you are right in terms that as far as the expectations that we had a couple of years back, they have not materialized. And particularly if one looks, for example, into neighboring Bulgaria, where the GDP per capita is much lower than the one of Greece. And there you see the retail sector flourishing. Plus the fact that the retail sector was actually the key driver behind the significant growth that the Greek banks had experienced in the 2000s. In order to arrive at that point, I think there are some important condition precedents that need to be dealt with. The first is that whilst the Greek banks have deleveraged the non-performing exposure, that does not yet mean that the households themselves have been able to deleverage. So that means that we have taken on the costs on our capital, but that cost has not yet been passed on in order to find the appropriate solutions into the ultimate beneficiaries. There are a number of reasons for that have to do mostly in the way that the auction market is operating. And that's why there is a lot of pressure to the government in order to improve the solution space, but at the same time from the government to the services to do more. So that is one area where I feel that the more progress we will find in that field, the more you will see that people will be able to focus again on financial decisions, because you appreciate that, if you have a forthcoming decision on the house you're living, you're going to be hoarding cash in order to make that decision with the servicer when time comes, and you're not going to be engaging into other financial decisions. So that is point number one. Point number two is that the Greek households, having come out of this severe crisis, they still operate a bit under the fear of not wanting to lever up, even if they are definitely bankable again. So that means that we banks, we need to engage into a more holistic discussion with our customers before starting to talk about, taking up leverage. And that discussion is what we're trying to do through the financial planning bit, which we're going to be starting on with our affluent clients, where we are quite strong and we have good relationship. And from there onwards, when they get the relevant comfort, then they will be able to open up and have that discussion in order to start levering up again. The third area, which has to do particularly with the mortgages, indeed, out of the residential real estate transactions, only 15 to 20% are actually taking leverage at the moment. So there, it is something that we need to do more with teaser products, with some acquisition cost, if you would want, to start having people coming back to the banking system and not putting so much equity into that.
All right. So we have about 3 minutes, so we can either take one more question or I can ask one more. Okay. So last question. So fintechs were a part of our discussions earlier in the day, especially Revolut. So are you worried about the threat posed by fintechs in Greece? Which products are the most affected? And do you think that something might be needed to defend your positions?
Listen, I think we need clearly to distinguish the short from the medium term, because short term, currently what we see is Revolut making inroads, Revolut not having a level playing field in terms of regulation. And what I hear from my European peers, that's a broad-based phenomenon in Europe, which personally I don't like at all. It is as if someone would want Revolut to flourish in order to say, well, we have innovation in Europe. But wealth is still in the hands of the more senior people in Greece. And they don't have an affection towards banks. It's a trust gap that they're having. That's why we hear that Revolut's balances are minute and they are merely on transaction. However, what is important to note from our end, and be quite self-critical on that, is that we have not been close to the youth segment. So that means that if we don't move quickly to establish a connection to the youth segment, when the succession of the wealth will start taking place, then we may not be able to have a seat at the table. And then it becomes dangerous. So starting from this acknowledgement, I think we need to develop tailored propositions for each segment, because, an 18-year-old is not the same with a 30 or 35-year-old. You need to be granular in the segment. You need to brand yourself appropriately and position the value to them. You need to have a specific to that age group client service model. It's not the same for everyone. Also, we need to redefine our risk appetite. I mean, if we go through the traditional way, they're not going to be able to bank with us. And also, given that they are quite fast-paced in the decision-making, this is also what we should do in terms of speed of transition. So investing into digital, investing into partnership, this is very important. And this is what we're doing. The other point that we're doing is that we're leveraging AI to personalize the engagement, not just in terms of the interfaces with our clients with Gen AI chatbots, but also, quite importantly, with predictive analytics for our RMs. That is helping them a lot in their engagement. And finally, we're also transforming our international presence because we have a unified digital platform that would allow also Greek of the diaspora to come closer with that. And in particularly, given that it takes a bit longer to go into the succession situation there, tapping them already is quite important.
Right. Thank you very much for the presentation.
No, thank you for having me.